If you've been following our thought process on the markets here over the past few weeks and months, you've definitely noticed there has been more of a bearish tone. And quite frankly, if you look at things from economic indicators, from a lot of the data points, even just in actual price action, it hasn't been very, very bullish. But I did think I wanted to show you something today that actually has hugely potential possibilities. And so I'm giving this not to sound bipolar or some sort of, just totally changing my mind. I'm not. But because I think it's really important to be open-minded as to all possible outcomes at all times. And to be clear, this is one of the very few bullish signs, but it is one thing that I think if it does come to fruition, we could really see some pretty big moves to the upside and a potential another leg higher in risk assets, particularly when we talk about equities. It's not my base case, but I wanted to show it to you. So let us go over here, and what we're looking at is a chart of the industrial stocks. This is an ETF by the ticker symbol XLI, and what you'll see is that over the years, this goes all the way back to 2009, we've had a very well-defined range within which this has been moving higher. Well, what's interesting is that early in 2018, the industrial stocks had a fairly meaningful correction down to, this is in late 2018, so late last year, we had a meaningful corrective move to the bottom end of the long-term range. This is the 10-year range. And basically, if we look at this more closely, we have, through the lens of technical analysis, we have a very, very well-defined and picturesque head and shoulders pattern, or an inverse head and shoulders pattern, which basically is denoted with these little smiles. You can see the left shoulder being developed here, a clear head or the bottom of the pattern, and then a right shoulder right now, all of which is pushing energy. You can see it here, 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 and now here, pushing energy up against this, basically what we call the neckline of the formation. So the path of least resistance, if this move or if this pattern were to play out, would be rather bullish, and it would be to the upside. So again, I want to be very clear. This is not my base case, at least certainly not yet. This is one of the very few things that I see that are bullish right now, both from a technical, structural, and certainly from an economic perspective. But we do want to take it into consideration, and it's not completely random I'm mentioning this today, because we do have some very important central banking announcements coming out today. Today is Thursday, September 12th, and then again next week by the Fed. So this is important to understand. And again, to be very clear, I'm not here to sound that I'm about to totally flip my analysis. I'm just trying to show you that I think a healthy analysis, and one that's honest to yourself, is one that takes into consideration all possible outcomes. And so if you look at this chart, to me, this is just one data point. It's no reason to get all bulled up just yet. In fact, if you were to look at this a bit more closely on a daily chart, let me just zoom in a little bit closer, you would probably see that we've already traveled quite a bit over the past few days. We're actually already quite overbought, so I'm not quite sure we would see a breakout from here, but maybe we have to back and fill more. On the other hand, if we were to fail this pattern, and then there's, again, certainly a possibility of that as well, then this could all be very bearish. Then instead of a break to the upside, we would probably see a mean reversion back down to the lower end of the range. So anyway, folks, for what it's worth, at least this is just being honest. Again, I think an honest approach to the market requires us being open-minded to all potential outcomes. Hope it helps. Subscribe to the channel, leave a comment down below if you have any questions, and help us spread the word. Take care.